As you follow along here with the Brent Bruce Daily, you start to learn a little bit more about the charts and about what causes home loan interest rates to move one way or the other. And you'll start to kind of see the character of the market, especially during this time period. And we're really seeing a lot of that today. So I'm going to show you just a little bit about what I'm talking about as we prepare for the personal consumption expenditure report that is coming out on Friday. Today is October the 26th, 2022. It's 3:33 p.m. Central Time. So let's take a look at what I am talking about. If we look at the market right now, after a great day yesterday, we're now up 30 basis points, which is good. That's very helpful to continue in that direction, which is what we wanted. The 10-year Treasury is really helping us out, down 10 basis points and almost back to that 4.00, which we were really hoping for. Now, if I roll down here to the charting, there you go. I mean, take a look at how we've run up and basically almost kissed the 25-day moving average. Okay, so it seems like it hits these levels and then kind of bounces back, drifts back a little bit. So it seems like we're kind of wanting to stay right under that 25-day moving average right now. At the same time, the other chart that we look closely at is the 10-year Treasury. So we have been talking about that the 4.00 is not just a ceiling or a floor, a technical indicator, but it's also a subliminal floor or ceiling because people just think of the 4.0 as a big number. So right here, you see that this is the level of 4.0. Look at how today we touched on this and then went back up a little bit. And again, look at where this was a number that the market bounced off of, a little under, a little above, a little above, a little below, just back and forth because this was a very strong ceiling for a while, and now it appears like it's acting as a floor. So we basically have both the 10-year Treasury and the mortgage-backed security hitting both on ceilings and floors that are kind of stopping both of them at the same time. Where is that putting us as far as our home loan interest rate? So let's take a look at the Brent Bruce Daily. Now, if you remember and you're following along, we were at 7.125 earlier in the week. We came down to that 6.99 yesterday, and we're continuing to fall back a little bit here at 6.875% as of this moment with a little bit of a lender credit. Let's open this up and take a look at what would happen if we paid a point. Paying a point, I mean, it's a kind of a big gap between the 6.5 and the 6.375. So somewhere in this range here if you pay a point right now. So let's take a look at our scenario here just so we do this from a compliance perspective. Okay, so there's our overall scenario. What is it that we think is going on when it comes to the market? Well, again, the personal consumption expenditure report is coming out on Friday. This is a big report. I think that the markets basically have hit their technical ceilings and floors, and now they're waiting to see what happens with the PCE to see if it's going to retreat or break through those floors or ceilings. So what's going to happen tomorrow? Well, let's take a look here. If we're at 6.875 and we're coming up against a big number, what is it that we talk about usually happens the day before a big report comes out? Well, normally the banks, the mortgage banks are going to hedge their bets a little bit. And what I mean by that is if the market is truly offering a 6.875 and all things are the same, tomorrow what I would expect to happen is that the interest rate being offered would be probably 6.99, just giving the banks a little bit more margin to work with in case the report comes out and the markets react negatively. They've gotten in front of that a little bit. So that's what I think we'll probably see tomorrow is that rates will tick up a little bit, really, unless we have a very, very strong day in the mortgage-backed security world. It'll probably tick up a little bit as we prepare for the personal consumption expenditure report. Hopefully, the PCE has already been kind of baked into the market and we already have an expectation and that it hits that expectation. So it's right around what the market is expecting. But if for some reason it shows inflation wildly hotter than we had expected, we will see that negatively affect interest rates. Make sure that you like, subscribe, and share. Now, I'm going to have a link down in the email that's being sent out here today or in below this video if you're watching this on YouTube to make sure that you can click on and subscribe because more is going to be coming out specifically about more detail about what I'm talking about. Fibonacci levels, 25-day moving averages, PCE, CPI. We're going to teach a little bit more thoroughly about those things in coming videos that will be available on the YouTube channel. So make sure that you like, subscribe, and share. Have a great day, and we'll see how it goes tomorrow as we prepare for the personal consumption expenditures.